I'm Doug MacKenzie.
And I'm John Ward.
And we're the co-hosts of the ABCs of IBC podcast.
Come join us as we share our unique perspective on the infinite banking concept as the creator, Nelson Nash, intended.
Welcome back, everybody.
Hi there, Doug. How are you?
Oh, John, I'm all right. How about you?
I'm good. It's early yet, so everything's going great so far.
Love it.
Yep. So, I was thinking about back in the late 80s, my brother rented an apartment from this guy who had a multifamily, and the guy was in the other half of the house, and he also had a machine shop out back. And he was of French descent, and I remember back in those days, I always felt like, there's a lot of hardworking Frenchmen. They just they just have a consistency to them, right? They go out and work, and so many of them are self-employed, and so this guy had this big garage, had a number of employees, but totally low key, humble, not flashy. But this guy, I remember, it was probably, let's just say by 1990, maybe even sooner, because we had a stock market and we had a real estate crash at the same time. He bought a place in a town called Amherst, New Hampshire, which is a nice town.
That's where my dad grew up. Yep.
Oh, okay.
Yep.
Yeah, such a nice town. I bet I know your dad, and I've never talked to you about that.
Oh, so,
yeah. Well, I knew some McKenzies that lived in Amherst, so that's interesting. We'll have to talk.
All right, we'll talk about that after.
Yeah. So, but he bought this 8,000 square foot house. It had a pool in it. Here's this, humble guy, right? Keeping low key. Doesn't have flashy cars. Doesn't have the McMansion. Maybe that hadn't even fully started yet. But he bought this house for $140,000. And I was thinking about it today. So I wonder what that house would be worth today. Would sell in today's market, or even say last year's market, because I don't really follow it that
in
close,
Amherst, $1.5 million probably.
I was thinking maybe even more, because I had a house that was about half of that size, but it had another couple thousand square feet that could be finished, and I think that house would be. Yeah, I would probably be at least 1.25 now. So I was thinking more like 2.5 million, but it really doesn't matter. What the point is because this guy was a guy that put money away. He didn't just spend every last dollar he had. And he was one of the few people, as I remember, I'm sure there's a number of them, but percentage-wise, the banks aren't lending to people. People have lost their jobs. There's not that many people when times get really tough, when we have a bust. There's not that many people that have money. They haven't saved any money to the side. They haven't put any away for safekeeping. And they're not able to take advantage. If, I probably could have almost afforded that back then, not quite though. But the key is, can you even get a mortgage company to give you the loan? And so he had the cash, and I don't know if he had a life insurance policy and he borrowed against. I don't know any of that, but all I know is
Or he
he
did
went
it the
out.
traditional route of just
Yeah,
socking money away and saving CDs,
yeah,
whatever.
yeah, and
Well, I
he
think
had
the
the
point
money.
is that that's unusual when you look at the stats of most people. Most people have no savings. In fact, most people are in debt. And so they're playing a perpetual game of catch up. So you're right. There are people that, when times are good, they might have some extra money, but people have a propensity to spend that. What's that? Parkinson's law, right?
Yeah, you
Yeah.
spend up to
So,
your income, right?
right. You get the raise and you're like, great. Now I can afford a Mercedes. Now I can afford that extra $300 a month for that car payment that I want. So I'm going to do that. And we're going to go on that vacation and I'm going to redo the windows and, blah, 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 blah. But most people don't have dry powder sitting around. And if they do, it tends to be in something like a savings account or a CD to where if they're going to access it, it's gone. I know that sounds stupid to say, but that's the problem with traditional savings is that once somebody spends it, it no longer compounds. And
Yep,
so
yep.
most people don't have that in the first place. And when you look at the stats on debt and savings of the average American family, it's staggeringly bad. And people are left not able to take advantage of all these things that could better their lives because they don't have access to liquid capital to pull themselves out of that. Would you agree with that?
Well, yeah. I mean, I think it's partly because somebody has told everybody what to do. I mean, the majority of people, if they are going to put any money away, they've locked it away and they put it into a place that's at risk. So, of course, when we have these busts, uh, then much of that money gets drained that they thought they were saving, right? And again, not to really just beat up on all the same stuff I always beat up on, but the idea is that if you are already and everybody is in the same boat with you, everybody's in a tough place. um, that is what one of the ways they talk about the greatest wealth transfer, you know in history. But it happens during these well, the boom happens because then everybody's into whatever, right? Everybody's in the stock market, everybody's keeping so-called savings in these places. And then when it does blow up and then the bubble is burst, the bust, there's everything goes on sale, so to speak.
Exactly. So I have a buddy locally that he had money that he had saved up, and he doesn't. This guy would be the perfect person to utilize infinite banking, but that's another story for another day. But he had dry powder back in 2000, 2008, 2009, and
Yep.
he bought up an astonishing number of properties in southern New Hampshire throughout that time. He has probably close to 1,000 properties now. Got a
Wow.
company to manage it, but all started because he had enough dry powder to
Yep.
make the down payments on those first, couple dozen places or whatever. So he was able to, just like you said, when that opportune time came, when everybody else was running, when everybody else didn't have that money available, he was taking advantage. And Nelson talks about that in the book. This whole thing that we do allows us to take advantage of the opportunities we don't even know exist yet. They'll pop up when we have the money available. And I just looked it up, by the way. The median, right? So the median savings account balance for all families in the US was $8,000, which is low and not really enough to take advantage of much. But if you got to the point where you had 50 or $100,000 in dry powder accessible, think about what you could do with that. That would give you the opportunity to make that down payment on a house if it was at the right price, to maybe make an offer on a business that you see that's a, again, a great opportunity to, I mean, there are endless opportunities there, right?
Well, yeah, just to keep adding on to this, right? Again, it's the reason there's a transfer is because people have to liquidate certain things. One of the signs that things are uh, heading towards this bust, or it's clear for many when you're in the bust, is how much stuff is on the front lawns of, with for sale signs on it. How many vehicles, how many front end loaders, and all kinds, right? Because the boom is ended, and a lot of construction equipment that guys own end up there, or boats, or and people are liquidating, not because, hey, I have too much stuff. No, they're saying, what do I have that can turn into cash that I don't really need? And of course, things go on sale, because depending on how much people need the liquidity, I'm not going to say it's desperation, but let's just say they really want some cash for other things. And it might be just to keep everything afloat, right? Then, of course, the buyer, now it's a buyer's market, right? And it's not about trying to take advantage of other people's bad luck or tough times. It's what makes a market, right? It's what's a true market is, it's the zero sum game of, somebody else has got a need and I've got some cash to fill that need, right? They need to liquidate, and hey, I think I would like that thing and I can get a good deal on it, and maybe I use it for my own needs. And it could be a piece of equipment, right? It could be the construction guy that he did play it smart. He didn't spend all his money, and his business ends up thriving during that time, and he scoops up the people that overextended themselves because they weren't ready for any kind of rainy day. And even if they thought they were, where was it? What was it tied up in, right? And that's another thing. When you talk about this $8,000 savings, without digging into it, I don't know where it is. I don't know if it's in CDs. I don't know what is considered the savings, right?
Yeah, it could be that could be retirement savings as well. I honestly don't know.
Right?
I just did like a quick Google search there.
Yeah, yeah.
But I looked up to see how many Americans have $100,000 in savings, and as of November, they're saying that only about 12% of households have that. But again, how liquid is that, right?
Yeah.
Where is that tied up? And that's the big question. And that's the thing that I missed for a while. I kind of missed the boat on that. Is, okay, cool, I can look at a net worth calculation, but what can I actually do with that money right now? Like this moment, what can I do with that money?
Yeah.
And the answer for a long time was not much. Well, it's true.
Yeah, exactly. And again, it the pervasive mentality is, I got to put this money to work right now, and never really appreciating the fact that the work it might be doing is just sitting and waiting for this opportunity, like this gentleman that had a lot of money that you knew, and it had a lot of dry powder, and drastically changed his financial position, even though he was already better off than most. Having 1,000 properties now, or over this period of time, whatever it is. Yeah, he just was ready when there was an opportunity to really take advantage.
Oh, and if he had
And
employed that from whole life insurance, he'd be in a different position that way as well. I mean, at this point, I'm sure he'd have, tens of millions of dollars of death benefit on himself that, just based on his income that he pulls in. And, so it would have been substantially more advantageous for him to have deployed that from whole life insurance. But he's obviously in a great position regardless.
yeah. And I like the idea that if he did have the life insurance, and because he was putting it through his banking system of policies, that if he died prematurely, younger than most, that his heirs that end up with all those properties, whoever ends up with his assets, they're not as in a big a rush to liquidate any of it if they decide, hey, I really don't love this business, right? Or I want to do something else with the value of all these assets. Well, depending on what's going on, of course, back to how he got into it because of downtime. What if it's downtime right at the same time he passes away? Well, then that's not probably the best time to go and get rid of everything, right?
Mm-hmm.
But you could, because you have this death benefit, you can, just keep, slowly but surely selling properties, right? When it makes sense, and you're not in any rush to do it. The heirs aren't forced to do things faster because, hey, we got to pay for the estate taxes or we got to do whatever, right?
Yeah. And yeah, exactly. And he works with banks locally, for a lot of the funding on new deals and things like that. And he's got a good relationship with them, but he would have access to better rates than he's getting from those banks. And he wouldn't have to probably jump through some of the same hoops that he does currently. So the terms would be more advantageous to him. But
Yeah. And that's it back, again, so many people come to infinite banking because they've learned about it through some sort of real estate investment advice, or YouTubers or whatever that they're following, right? Because they say, well, that's how you can grow your wealth, right? Is to get into real estate. But it all starts with one property. If you really want, and I'm not saying people aren't making money and haven't been making money doing it, but certainly there's absolutely no doubt in my mind that there's a huge buying opportunity in wealth transfer opportunity, or accumulation, creation, coming very soon. I don't know exactly when that is, but I would probably if I was a betting man, which I'm really not, I would say, before the end of the decade, before the 2030s, probably sooner, because there's already signs that that's happening. The home builders are slowing down, right? There's just, and people just don't realize the ripple effect of the housing market and what effect that has on the economy because of all the things that go into a home, or services that are needed for a home, and just on and on. And when I was back in that time frame, so uh, 92, I got, I was married in 90, had my first child in 92, bought my first house in 94. Uh, I can say, like in 1986, I was only a year out of college, and I was like, I'm never going to be able to buy a house, right? I'm just like, because it was frothy at that point. And I think there's a lot of young people right now saying, I don't think I'm ever going to buy a house. These houses are all even
Oh,
shack.
I hear that all the time. I was getting my oil change the other day and I was listening to two people have that exact same conversation.
Yeah. I mean, it's got to be painful to young people to have seen houses that were just a few years ago, maybe 250,000. Now they're 550,000, and it's not
Oh
much of a
yeah.
house, you know.
Yeah. It's exactly what happened near us. I mean, you get like a pretty decent, 2,000 square foot 30-40 year old house that isn't perfectly updated but is move
Yeah,
in
it's
ready,
livable.
right, for like 300 to 340. And that was 5 years ago, and now it's those same houses with no updates are 5 to 600, which
Yeah.
is not tenable for someone with the average income, especially with the raise in interest rates. I mean, it's crazy different for the payment on that,
Right.
you
Right.
know? So all these people that could qualify for 275 to 340 in mortgage at 4% or 3%, they can't they can't even come close. So they're stuck renting somewhere that costs them, you know, not quite as much as the mortgage now, but close to it, right? It's just and it's just it's a sad situation.
Well, yeah, because you know, then you're like, okay, then how do I make a bunch of money? Well, then I gotta start, you know, investing in the market. I got to find some high flying stock. I got to do penny stocks. I've got to, hoping, they go from 10 cents to, $3. I'll buy 1,000 shares, like how am I, or I'm going to buy some Bitcoin or other currencies,
Or
other,
buy less coffee. I don't, cut back
yeah.
expenses is, eat ramen. But
Yes, yes, all that.
I think, before you said people are concerned that if they're not putting their money to work right away, that, they're missing out, or, that they need to
Right.
be doing that. And I think what people miss is that paying premiums on whole life insurance policies is putting your money to work. Even
Oh,
if that's all you're doing for a while, you
mhm.
are putting your money to work. You are building that pool of capital that you can leverage at any point that you want. And that is putting your money to work in a way that's way more advantageous than most people realize.
Oh yeah. And it's right back to why we started this, I guess, is the dry powder, is because it is working, and until you find something that you truly want to utilize the money for, whether it be for personal, buying a house or a car, or taking a trip, all that kind of stuff, but just be patient. Be patient. This is not a stupid thing to do. It isn't the worst place to put your money. It's one of the best things you can do for yourself, is to control the financial environment in your life, as Nelson talks about, right? And in your, again, the name of your company,
Yes.
Control Capital Solutions. Of course, I want to say the whole name, but control the capital. Be in control of that capital.
Yep.
And then when there is this almost no brainer, right? Like I don't know what that guy did with the property that he bought for 140,000 that had 8,000 square feet. I don't know if he was going to, go live there. I don't know what, or was he going to rent it out? And he'd certainly be getting a good rate of return because people couldn't, they, whatever. I mean, he only bought it for 140, so I'm sure whatever he could get for rent was probably a good rate of return on his money. So he stored some of his cash now in this other asset. And, maybe in someday he may decide to liquidate it, right? Like right now. I don't know. I don't even know if he's alive, I'm just saying, like, he could liquidate it and say, yeah, I don't need that property anymore. And now not only did I make a rate of return all those years, I also end up with this big appreciation of my capital, right? Which was in that asset. And so again, it's not trying to build up the big story. This isn't just about the poor young guy and couple or whatever, that girl that can't buy a house. This is about the clients we have that are in their 40s, their 50s. Do this. Don't be afraid to capitalize, because how much dry powder do you have? Well, how much powder did you put into your system?
Yeah, I've had that conversation too many times. Well, I wanted more cash value available at this age. Well, you got to put more money in, right? It's the way it works. But it's going to pay off exponential returns. And then there's like just a series of different things that happens when in your example, the guy that bought that house, well, it appreciates, which means that he's going to have access to leverage that house down the road and leverage it for a lot of money with the amount of equity that he has, that he could take advantage of additional opportunities and so forth and so on. So if you're somebody that is buying multiple properties and you start off by, capitalizing your system with whole life insurance, you're going to have access to not only the leverage that you can get from a whole life insurance policy, but also the leverage that you can get from the assets that you buy with that policy. And so it's this cascading event that really changes how people can operate their lives.
Yeah, it's as Nelson says, it's really the smartest thing you can do financially in your life is to take control of the banking function. Mm-hmm. And really the banking function he means the financing, because you're helping these banks. You're already doing the banking function, but you're using somebody else's banking system, and you can see that they're making money doing this, right? When he talks about the auto finance company, right? And when you start to realize that they're buying a bulk amount of money from insurance companies, actually, right? That lend it to them, and they wholesale the money to them, and then they go and they bump up the interest, right? So they're paying the company that has this pile of cash, this insurance company. They're buying it for 5 and they're charging 10, right? And of course, that's the same thing you do with these policies. You've got the wholesale. You borrow it at 5, and you pay yourself back or you charge somebody else more. And do you have the room in the policy? Well, if you don't have the room in the policy, then you want another branch of your banking system. And I want to add one more, and this jumps a little bit, but I have a client, a relatively new client, became a new client last May. I don't want to say too much personal information, but let's just say this person worked for a big medical center as a nurse, didn't get vaccinated, was let go because she wouldn't get vaccinated.
Mm.
She went and became a school nurse. And let's say it was under 6 figures, but enough to do a policy that was good, and she was being smart with her money. And she reached out to me a few weeks ago and said, "Hey, should I be putting more money into this policy so that I have access to even more?" And I said, "Well, yeah, but let's talk." And she said, "Okay, well, I'm working these 12-hour shifts, and then I'm available these days. So let me know what works for you." And so I got on the phone with her and I said, "Oh, you switched jobs because I know that's not school nurse hours, right?" Well, let's just say her pay almost doubled when she went back to that same medical center to
Mm.
work, because now the medical center is saying, "Man, we don't care that you're not vaccinated."
Yeah, because we don't have enough people to work.
Exactly.
Well, yes.
And not only did she go back, she got a raise from what she used to get paid from them.
Yeah, of
So
course.
not
Yeah.
only she took a hit when she went to the school, and then she went back 4 years later, and she got a raise. And this is kind of speaking to everyone, but certainly our clients, which is when you do get that new job or in the increase in pay, whether it's new or existing, or hey, you got a job and now they're going to pay you an annual bonus. This woman was afraid she was going to fritter the money away, right? That if back to Parkinson's law, which is you're going to live up to your lifestyle is going to live up to your income. But she all of a sudden ended up with all this cash in her bank account. She's like, "Oh, I don't like that because I'm afraid I'll spend it." Right? That I'll do things that I don't need to do. But I got all this money just sitting there. So we literally wrote another policy that was a little bit larger than the first one.
Mm.
And she felt so good about it, Doug. She goes, finally starting to do the right thing with money.
That's a great story.
Yeah, like I feel good about this because I already know enough because I started doing it with another policy. But then I'm just like, yeah, I just know I'm being mature. I'm trying to raise. She's got 4 kids. She's trying to raise, these little kids to be, adults, to be mature individuals and have a good life. But she's also saying, yeah, and I get to share this with them, right? And then maybe her goal is that, she's not even quite 40. She's hoping by her mid 50s she can retire.
Mm.
Because she's had some loss in her life. A parent that died young. And she goes, "I don't want to miss all the time that I can spend with my family." Right. And she does do this nursing, which is still, it's quite a commitment, but she does 3 days of 12-hour shifts, and, but she doesn't want to just work her whole life. So she's planning, yeah, I'm going to be smart with my money. And so, yeah, just think about that, everyone, right? Is just keep putting powder into your bank. And it may be for opportunities, but it may be just, hey, I have options and I have a choice and I have a chance to, I don't want to do the 12-hour shifts anymore. Maybe I'll do one shift. Maybe I'll do none. But I'll have the choice because I took this action and I kept being smart with my money and not gambling it, right?
Right. Yeah, freedom. We've
Freedom.
talked about that before. That's great. Love that story, John.
Yeah, thanks.
Yeah.
All right.
You got anything else?
I think that's enough for everybody today.
Yeah.
For me, anyway.
Well, thanks everybody for listening as always, and we'll be back next week.
Sounds great. Look forward to it. Thank you, everyone. Thanks, Doug.
Thanks, John.
Appreciate it. Okay, bye.
Thank you for joining us for another episode of the ABCs of IBC.
If you enjoyed listening, please hit subscribe and leave us a 5-star review wherever you listen. It really helps. See you next week.
Bye.